Hi everyone, thanks for joining me today for the Welcome to Right Sizing for Bookkeepers. So I've just got a little bit of information here, some of my blog, Facebook, Twitter, LinkedIn, Instagram, YouTube, and Google Plus addresses. So feel free if you want to follow me on any of them for more any tips and information. You've got those addresses. Okay, so there's me. So welcome to Right Sizing for Bookkeepers. My name is Tanya Hiltz. I'm the founder of Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. I've been in business since 1997. I've been working with QBO since 2012. I embraced cloud technology in 2014, implemented value pricing in 2015, tripled the sales in the first 12 months of implementing value pricing, and the newest Black Swan as presented or sponsored by Intuit. My story. I chose to specialize in QuickBooks Desktop as my niche was a small entrepreneur and QuickBooks seemed more targeted to my market. I retroactively started supporting QBO in 2012 just simply due to the demand of some of my clients, but at that point I used it like the desktop product. And I spent the next year focusing on learning all about cloud accounting, apps, value pricing, and how I could transform my practice from data entry to data management. And implemented everything I learned, tripled my sales within a year, and I'm on target to double them again this year. Clients liked what I offered, and like-minded clients began to spread the word. It freed up more time for me to be able to utilize all that was now accessible to me to help my clients grow their businesses as well. And I refound the passion, as let's face it, what we do is mostly data entry, and that's not what I was passionate about. I became an Intuit sponsored Black Swan in 2016, mentoring under Ron Baker in the IPBC Black Swan program. And my practice has now grown from just me to myself and 3 employees. One of those is full-time, one is a new part-time employee, and the other is my daughter, who's very part-time, just administrative help and whatnot around the office. And I can work anywhere where there's internet, which is awesome. Now, although I chose QB products, that was just my tool of choice. The value pricing formula I discussed today can be used with any accounting software package, traditional, desktop, or cloud-based. When you use the compatible cloud-based software and integrate the apps and time-saving tips I'll be reviewing today, you can be so much more efficient and substantially increase your bottom line. So why value price? With hourly billing, we're penalized for our increased experience, being faster processing, our increased knowledge, having more certifications, being an expert in our field, leveraging the current technology, offering the client more value, providing custom solutions for each client, and if we're employees, we would actually be rewarded for all of the above. I like to call value pricing right sizing. It's the right client with the right solutions for the right price. Right sizing is a win-win situation. The client gains agreeing in advance to what solutions we will provide them, agreeing in advance what price they're willing to pay for these solutions, and we can then also teach the client to right price their services, which increases the value we provide to them. With right sizing, we gain agreeing in advance what solutions we'll provide, agreeing in advance what price they will pay us for our services. We now know what our monthly recurring revenue is, being paid in advance for our work, because you should be billing at the top of the month rather than at the end of the month. And incentives for us to gain more certifications, leveraging the most current software and to complete the work in the agreed upon time frame, as we're no longer penalized for our speed. Excuse me. So anyone can right size using any software. Right sizing can work if you're using any desktop software. However, by leveraging the most current cloud technology, you can increase your productivity while decreasing the time you're working on the file, all while still charging the same fixed rate as the client is still obtaining the agreed upon outcome. The whole idea behind this concept is to have the client focus on the outcome rather than how long it will take you to achieve the desired results. So what tools do I use and how do I use them? I use QBO as my main accounting software. I use 17 Hats for my quotes, contracts, workflows, and automatic email systems. I use HubDoc, so I pull bank statements and have the client submit receipts via the mobile app. For those of you who don't know, you can snap pictures with it, or they can email forward. I use Ortessa for my pre-authorized withdrawals. I offer options of the 1st or the 15th of each month, and I collect advance payments. And I use Invoice Sherpa. So those would be for, my one-offs. I do taxes. A lot of those clients are not local as well. So it's invoice sending and AR follow-up, used for about 15% of my grandfather clients as well. Otherwise, all 85% of my clients are currently changed over to a fixed rate on value pricing, or right sizing, should I say. And then with Invoice Sherpa, you can also turn around and offer an AR package as part of your plan options, which I do. So just while we're on that, my existing clients, what I use for them my grandfather clients, is the value pricing, the conversation. I just, to be honest, could not figure out a way to have that with my existing clients. When I started, it really didn't go well. So what I ended up doing is I ended up changing them all from QB Desktop to QBO, including the cost of the software, obviously, that I'm using. So I'm using QBO and HubDoc with all of them. So I included that software into their prices. And then I took their last 12 months worth of bills, added it together, divided the whole thing by 12, and came up with that price for them. And then so what I did is, once I was in QBO, I was still able to implement the time saving efficiencies and to make it more effective, the work that I was doing for them. And then that way they were happy. And then of course, prices are increased based on the percentage, but it's just been an average of 5% each year. So time-saving cloud accounting software features that I take advantage of are bank rules. So items such as bank fees, interest charges, automatic loan payments, and daily merchant deposits for clients with a non-integrating POS or old-fashioned till. I have bank rules set up for those to automatically add them. Recurring transactions for recurring items, or as templates for frequently used journal entries. So for example, for when manual payroll when external software is used. So I have 2 clients that I run their payroll through QB Desktop, just simply because it's a little more complex than QBO offers. So I run it through Desktop and add it in through manual journal entry. So I have those set up as templates, again, to make things go a little quicker for me. So with right sizing, it's important that we educate the client. We really need to educate them on what it is that we're doing. Again, educate to have them focused on the outcome, the desired results. You need to educate them on your value, the value that you offer and that you bring, and what they're going to get that's different from you than with anybody else, and why they should convert over to cloud services versus the traditional bookkeeping, hourly services. You need to give them options. So give them a couple of different price options. The rule of thumb is always give 3 options. Make sure that you include your software costs. You have to account for your time. And yes, I will show you how to do that without actually tracking your time. Now, truth be told, I actually do still use T-sheets from time to time. What it is I just wanted to make sure that my formula was bang on and I'm charging appropriately. So generally, once we come up to a renewal of the clients, I will actually pull out and we'll use T-sheets for a 3-month term, just to kind of make sure that that we're still bang on for that, and we are, but we're not having to track for every single client all of the time, which of course is a time saving as well. We need to determine our profitability in there and what our bottom line is, so what you're willing to walk away with. Ron Baker suggests in his book, Implementing Value Pricing, that you value the following items by the following percentages. First off, you need your hours times your base rate. Your fixed price, a 10 to 20% surcharge, It's worth it for anybody to pay 10 to 20% to know that their price will not fluctuate over, the next 6 months or the next 12 months. Excuse me, whatever term it is that you use. Change orders, 5 to 10%. We should definitely account for change orders. And what that is those are the little things that might change, that the client might add on and ask you to take care of from one month to next. There's always little things that'll change from one month to the next. Of course, if they come up with something that's, a larger project on its own, then you should definitely do up a change order for that, or, quote them for that job separately. Or if their whole business has actually changed substantially from the time that you first put the contract into play, then absolutely. Or if all of a sudden they want you to have, to do the invoicing instead of them. All of those should actually institute a change of price, a permanent change of price, I would say, unless, again, it's just a kind of one-off job, in which case you can quote that job separately. A value guarantee of 15 to 30%. It's definitely worth it for people to know that there is a guarantee, a value or service guarantee on their work, and we're probably all giving that right now. So think about it. If you go out and purchase something, it's like a warranty. You do purchase extra for warranties. This is like our built-in warranty, and like I say, we're all providing that at no charge right now anyway, I'm sure of it. Payment terms, 5 to 10%. So again, if you think about it, rather than having them pay upfront for the services in full, if you take a look at, your insurance, your, financing on a car, to finance anything over a term will cost. And sometimes it's just, strictly a small percentage to cover, the payment options or something. But flexible payment terms, now it's good to have these. So for example, don't think of just the traditional divided by 12 for your payment terms. You should also think of being very flexible with payment terms. So a couple of examples are, I quoted somebody with a catch-up job. And so what we did is I actually took the cost of the catch-up job, signed him into an ongoing contract as well. So I took part of the cost of that. He paid so much up front. I took the rest of it and added that into his first year's worth of payments. Another option is if you have seasonal clients, you could maybe, let's say, have them pay, give the services over 12 months, but only have them make their payments over 6 months. So when they actually have revenue, more revenue, and the other 6 months they've already paid for, so they're not paying again. So again, get creative with the payment terms, and that type of flexibility is definitely worth 5 to 10% to these clients. And of course, you're not telling them how much percentages you're adding in here for each of these. This is just for our knowledge. Unlimited access, 10 to 20%. Now I'll tell you, that number was scary to me. When I first thought, oh my gosh, I'm adding unlimited access into this. Again, that was scary. I thought I'm going to spend all of my time talking to my clients and not getting any actual work done, and not being able to grow. And that's not the case. With the right client at the right package at the right price, it is a non-issue. I have several clients that I did price correctly that are at the right package at the right price, and I actually have to contact them every few months because I don't hear from them because the process is just going so smoothly. Yes, it wasn't going so smoothly. There was a learning curve at the beginning, but once that learning curve was gone, there's no issues. So they're not contacting me because everything runs like a well-oiled machine. So I'm reaching out to them. Then I have those clients that I did not price properly, and yes, sucked my time, most definitely, and I lost some money on, but I learned, again, to price the client properly. I have a very stringent process now. I have many, many questions. I use 17 hats for my questionnaires, so I have many questions that I ask the client to be able to determine their personality, how they value certain services that I provide, to determine are they the right client. And those that weren't, as soon as it came up, I cut the cord. So again, with the right client, unlimited access is nothing. It's not going to be the scary thing that you get. You need to include your apps and your add-ons. And calculate the hours from the balance sheet. So this is getting rid of the time clock. Excuse me. And then there's the gut price. So your gut price is, that's going to fluctuate per client. So this means that you're valuing your expertise at anywhere from 45% to 90% and charging an appropriate surcharge for this. And yeah, we get to do the happy dance now that we've got a formula for that. So I'm going to do a quote demo right now. So let me just see here. Okay, so what we've got is, this is the template that I have devised. So the first sheet here, this is just, I used to use this for quoting before I used 17 hats. I just use this internally now. I do not give this to the clients. It's, like I say, I still just use this for internal purposes only. So if you did want to use this for a little bit more, of course, I have my, all my options set up, everything that I thought of that, I would be providing here. And then of course, down at the bottom, you see there's cleanup work. So these prices are actually derived from the other sheets here. So in here, I've got my services, and then of course I've got my diamond, gold, and silver packages. The gold in the middle is really where I want to draw people into. So, I have that highlighted. I have that in bold. That's where I really want to draw their attention to. The silver, this is more, for the most part, until I actually get into customizing the packages, this is just basically kind of, I'm going to do the reconcile. I'll do a monthly review. I'll do your, your HST, your payroll, but really you're entering the apps that, or sorry, your receipts, your expenses and your invoicing. The gold would really be, I'm entering the expenses, you're dealing with the sales, and diamond would be, I'm dealing, basically with everything. So it's like having an in-house bookkeeper, which of course is why the difference in pricings. So with this sheet, of course, this is all editable. So let's say, you don't want that in there at all. You can delete that. You can throw something else in. You can move these around. So it is flexible enough. If you wanted to actually use this, as a little worksheet for clients, you could certainly go ahead and do that. Any field that is like this, where the prices are, I can't even click here. So I do have those protected, so you can't change the formulas, which is a good thing. And that's that sheet. I have the client quote tab, and the client quotes, this is just where I used to enter the information. I find people that, a few people that are using the worksheet have said they still use this. So I've kept this in, and this of course would just be temporary information until you can get to your 17 hats, or, if you use practice ignition, or if there's anything else that you use, Mark Wickersham's or whatnot, to actually send the quotes out to the clients. Yeah, in the meantime, you can just put your information in here, and it just kind of saves it for you. And then we have a rate sheet and our worksheet. So our rate sheet is where all the pricing is. So here I've just kind of got this pre-filled with some information. So we've got wholesale pricing, retail pricing right here. Here's the software name. So yes, right now I do only have QBO, just simply because that's what I use. You can definitely add here, so you can add, if you wanted to add Xero, if you use Xero with your clients, you wanted to add crunch boards, you can add anything like that. You don't have to fill in the wholesale and retail. That was just kind of like a starting point for information. And then you're going to put the price you want to charge. So let's see. Xero, you're charging $30 a month. Crunchboard, you're charging $50 a month. Float, you're charging $15. I have no idea what their prices are because I don't use either of those three, but those are just examples. In the blue fields, this is actually what derives the price. So the blue is important to fill in. If there's nothing filled in the blue, it will not transfer over into the worksheet. So I'm just going to pop over to the worksheet for a second here, and you'll see here's float, Xero, crunch boards. So if I were to put a point in here, it's actually going to pull the price. We'll get back to the worksheet a little more later. Your plan names, you can change that. So you'll see if I change this to catalog, for the catalog of plans, you pop back here and this changes. Again, if you're not using this for the clients and you're just using it for a price, that is really doesn't matter so much. You can actually change, from Cloud Bookkeeper, you can change it to, your company name. You could insert to add, insert a picture to add your logo. I don't know why it won't let me do that. But you've got that type of flexibility again if you were using that a little more in depth. Over here, we've got the additional items. So here's an annual price and here's a monthly price. I want to point out a couple of things that rounded numbers are a little more pleasing. So here, instead of $500 for whatever that is, if that's, for their annual taxes, if they're a sole prop, you could, throw something like that in your, whatever it is that you would charge for that. An AR package, a full AR package, maybe $50 a month for handling their AR. You'll notice again, you can't click on anything here in the monthly price. If you can't click on it, it means there's a formula in there, and I have those protected. So let's just see. I'll put AR up here. Oops, 600 for an AR package, and I'll just delete that. Okay, so here, the base rate. You need to fill in your base rate. Now, it's very important that what you fill in here is not your already inflated base rate. These rates are built so they're in the middle of Ron's suggested value pricing surcharges. So it's a 75% surcharge, I do believe, or right in the middle of the 45 and the 90. So I do believe that's 75 that it works out to. There is a spot where you can change that, of course, per client. You can, increase that or decrease that very easily. But if you've already started to value price and increased your rate, so for example, there was one of the bookkeepers that I was working with who had actually already increased her rate to, $75 an hour. Well, if you throw in $75 an hour here, it's going to add a 75% surcharge on top of that. So if you are not thinking about what to put in here, you could price yourself right out of the market. So what I suggest is start with your hourly rate or what it was before you started value pricing. So here in the office, we actually use a combined rate because I don't necessarily do everything, but my hourly rate is higher than the hourly rate of, when Leanne is doing some of the bookkeeping. So we use a blended rate here. And then of course, because where we are, the rates here, we are in a very rural area, and it just can't afford the same rates at Toronto. So if I'm pricing somebody local, I might price them at $37.50 an hour. If I'm pricing somebody in Toronto, I might throw in like a $60 or $70 an hour. So again, with us being cloud-based, we have that flexibility. So you can just pop back in here, change the base rate here, and then all of a sudden it'll change all the calculations to here. So you see those prices have gone up for, the last quote that I worked out in here. If we go back and we change this to $37.50, you'll see that they've gone down. If I put in 35, it's gone down even more. So, but again, this is not what you're going to do to price those people back and forth. You're not going to change that. You're going to put in your rate for that area. And really, again, the only time you're going to change that is if your rate for that area has changed, or if you're quoting a different area, again, a more metropolitan area. So we'll just go through some of the tips and whatnot I have here. So the rate sheet instructions. So you'd enter your chosen rates in the blue areas, and note the base rate is before the value added percentages are added. So if your base rate is already inflated, this will inflate your pricing even more. I know I've already said that, but that's very important. The white fields can be customized with your software choices, and the retail and wholesale prices can be edited when the cost of the apps change. Clients sheet instructions. The form has suggested items that might be included in the different plan levels. Most of the form is fully editable so that you can customize with your planned inclusions, your logo, and your name. So that's this sheet back here, the first one. When we go over here, some fixed and value pricing tips. So these rates, again, are built so that they're in the middle of Ron's suggested value surcharges. It is recommended that you have a leniency of 15% either way based on how you perceive the client values your services. It's also recommended that your walkaway price is no less than 15% off the recommended price plans. I mean, you certainly could, but again, you're lowering your value, which is ultimately lowering your regular hourly rate, and it could lower it to the point where you make more if you build hourly. So there's no point to fixed and value pricing if you do that. So first off, I suggest that you play with the prices. Definitely quote the client when you're not with them. Play with the prices. Make sure that you are completely comfortable with the amount that you're quoting for them or them for, and have taken all the information into account. If you do that, then you're going to have the confidence when you're pricing them, which is huge to have the confidence, most definitely. Excuse me. And down here, if the client wants to negotiate further, negotiate the services. Have the client do more or take services out of the package. And I'll show you how to do that in the demo that we go through. And the client may not value the services you offer. Review what you're providing and what is important to them. You may have included items that are not of importance, and by changing the services to those of equal value to you, you may be in turn increasing the value to the prospective customer. And the most importantly of all, not everyone will value what you do. You need to determine your minimum and you need to stick with it. Just to kind of go off point here for a minute with a very important anecdote, so to speak. My best friend, so we have known each other for, I'm so sorry about this phone call. Okay, so my best friend, again, we go back to grade 10, and so that's what, 15 years old, we're 45, so we've known each other 30 years. So her services in the field that she is in are billed out by her employer by almost $200 an hour. She's actually in the cosmetics, or not cosmetics, but the beauty field, doing facial surgeries and laser skin removal and tattoo removal and blemish removal, and she does a whole slew of things, but her services are billed out at $200 an hour. Now, so with that, I would have thought, again, knowing me for so long, knowing what I do, I helped her boyfriend set up a business, and of course I gave them a whole bunch of advice and went in with them, and it's a taxi business, but I had Tim set everything up, and I guess for probably 6 months I gave him free advice. So she called me and said that she would actually like for me to price them, because they know that I'm not going to, or that I'm going to do everything. I'm going to keep them in compliance. I'm going to do everything properly. They're not going to get themselves in trouble, and everything will stay on top of it. And that was what was important to them. So I thought, great. Now, his taxi business at that point was still doing $7,000 a month in sales. So I quoted them, and I didn't quote them based on how much it was in sales that they were doing. I actually went very low, just simply because I wanted to be able to cover my costs, make it worth my while, so that I wouldn't, want to dump them immediately as soon as I got another client, but I wanted to be able to give them a break. So I definitely quoted them much lower than I would have quoted somebody else in the same situation. So I quoted them $350, and that was basically for my middle package, where, I kind of did everything. They, I just entered their, the sales monthly, or he entered them either, daily into QBO, or just gave me the figures monthly. So I would just put a journal entry in at the end of every month for the sales. And then all the expenses were through HubDoc, and, bank recs and whatnot. And then, of course, their, HST didn't have any payroll. It's a sole prop. So I thought that was actually a really good price. And she actually laughed at me, and she says, no, that's too expensive. So I said, okay, let's take it a step back. I negotiated with the services. I said, okay, let's take a step back. If you guys want to do that, I'll do the monthly reconciling. I'll do the compliance. I'll do all of that. But they were actually going to do the entering themselves. We took off HubDoc. That would bring it down to $250 a month. And that was the lowest I was willing to go. She laughed at me and said, Tanya, all you do is add numbers. I was shocked. My jaw hit the ground. And that was when I realized that not everyone will value what you do, no matter what. So you do need to determine your minimum, and you need to stick with it. So for her, I don't even think $100 a month would have been enough, because again, if all I'm doing is adding a few numbers together, you know, how much do you want to pay for that? So that was a very, very important lesson for me to remember. So definitely remember that yourself. Now, pricing the apps. You're not really going to make money off the apps, and that's going to increase your price. Your price, your value should be on the services that you provide. Of course, it's recommended that you ensure that you cover your costs on the apps. Personally, I just charge wholesale, my wholesale costs on the apps. Now, some apps give different pricing levels depending on the number of clients that you have with them. I recommend that you use your base price without the extra level discount, because if you've got customers that you've removed from those apps, you could lose your discount. So, for example, HubDoc gives you 10% discount once you've got 10 clients. If you drop down to 9 clients on them, you lose your discount. So you've lost 10% off 9 clients. So you've lost, 90%. So that's almost a full subscription. So you want to make sure that you can cover yourself. And so round the prices up to the next dollar for the monthly price, because of course rounded numbers are more pleasing to the ear. You can include, an accounts receivable or accounts payable package, and don't forget to include the cost of the app you'll be using for these tasks. And variance. With true value pricing, some clients might value your services slightly lower, possibly due to budgetary reasons, but these clients in all other aspects would be a good fit for you. Alternatively, some clients may value your services more and be able to pay a little bit more. As you should take the client into account, as well as the work, the apps, and add-ons involved, this pricing module has used, again, the middle point of the values as recommended by Ron Baker. Therefore, in order to remain profitable, you do have the leniency that for every client using minus variance on, you can add on a client with a plus variance and you'll average out. In the variance boxes, I will show you this. I know there's a lot of information that I've thrown at you, but very soon, momentarily, you will actually get to see how this all pulls together. So in the variance boxes, you're going to enter the percentage only you want to add in the total variance plus box. We recommend up to 15%. You can certainly add more if you think that the client will pay more and that it's valued more to them. Should you wish to lower the price, so basically almost give like a discount, you can put the percentage of discount you'd like to add in the variance minus box. Again, we recommend no more than 15% in order to remain profitable. You only need to enter the whole number and no minus signs or percentage signs. And this will total into the calculation. And even if the client is seeing you do this, which again, don't quote the client when you're there, the client will not be aware of what you did behind the scenes, even if they're watching you. So we'll pop over to the worksheet. So I will just blank all of this out. There we go. Okay, so this top portion I've got, we use for cleanup. So you're going to enter the number of months requiring cleanup and then 1 point for each, and the points only count towards the cleanup. So bank accounts, credit cards, line of credit, cash on hand, AR, AP, payroll, sales tax, and equity. So whatever accounts need cleanup, you can just go ahead and add a point for that. Again, these only count towards cleanup. Excuse me. So if you're pricing somebody for cleanup and monthly, you will have to take those same bank accounts and add them down in here as well. Otherwise, what's going to happen is you are going to end up not charging enough on the monthly. So this does not duplicate at all here. So what is down from this point and below does not count into, oops, sorry, I went right below that. So what's, I guess, here below the basic items and below only counts into the monthly, whereas what's in above that only counts into the catch-up pricing. So let's say, okay, and then down here, sorry, jumped ahead. Under the basic items, anything put in these ones is included in all 3 packages. Anything included in these boxes is included only in the top 2 packages. Anything included in these boxes under the premium add-ons are only included in the top package. So, and then over here we have the software, and then over here we have the additional items. So all you're doing is you're just entering points in here. So I'll just use actual examples of clients that I had not too long ago. So I quoted somebody for 2 years worth of cleanup work. They had one bank account, one credit card. They don't have a line of credit. They didn't really use enough cash on hand for me to count any points for that. They didn't have receivable, payable issues. They had no payroll. They did have HST, and they didn't have anything in equity that needed to be cleaned up. So that was it that I used for that. At the same time, I also quoted them for going forward. So that same client, again, we're going to put in one bank account, one credit card, one sales tax. Now, that same client, when I got to the point of, actually, let's take a look first off at the balance sheet. So we pop over here, the cleanup work. And we take a look over here at cleanup work. 24 months is $44.10. And what price is that based on? That's based on $35 an hour. So again, make sure you've got that accurate. So I put $37.50 here for my area. So that's $47.25. That might sound like a lot to some people, but work it out. $47.25 divided by 24, that's only $196.88 a month. So if a client came to you with, one bank account, one credit card, and, a quarterly sales tax, that's only $200 a month. That's not a lot. And that's not even including the cost of the software yet, because you could just run that through desktop and get that caught up. Now, they might try to negotiate down on that cost. I definitely hesitate against that. The reason being is because you don't want to make it appealing for the client to let themselves fall into this position again. You don't want to make cleanup work cheaper than you actually want to make your monthly amounts. So that is what I would quote, and I would stick to it. And then, for backup work, I would take a minimum of 50% up front. Again, if they're signing on to a term, you could payment plan the rest. Again, get flexible with that if you wanted. And again, only what needs cleanup. So now that same client says, okay, yeah, let's take a look at the monthly. So they say, you know what, the way that they had it done before, let's say their old accountant, left them, and that's why it took them so long. So they said, no, the way it was done before is they just dropped off they had the receipts dropped off and picked up from them. So this person does not want to leave their place of business to bring them to you. Because they're thinking a little old-fashioned. They're not quite thinking ahead in the cloud technology and the type of flexibility that offers. So I'm going to charge. Now, one thing to keep in mind, 1 point is equivalent to approximately an hour's worth of work. So if they come in and want you to quote on something that is quite out there, think of it in that way. 1 point is equivalent to approximately 1 hour's worth of work, and you'll be able to price anybody. So I've got their one bank account, their one credit card, one for sales tax, and one for picking up and dropping off the receipts. Now, I use HubDoc. So I do not manually enter them within HubDoc. That's part of the whole process, that they have the receipts on QBO. So I'm going to have to scan receipts now. Now, they've also said, you know what, they're not comfortable setting up the bank feeds. They really, have not known anybody to use the technology. Again, this is something common that we get here in this area, because there's not a lot of QBO users in this area, and those that do use it in the area are using it like a desktop product. They're not using it for the functionality that it has. So, you know what, if I can't have your bank feed, I'm putting a point in for that as well. And number of receipts to process. So this is where I would definitely put in, it's 1 point for every 50 receipts. So again, approximately 50 receipts would take me approximately an hour to enter and process. Again, you need to look at everything the manual way. Do not penalize yourself for the software that you're using, and knowing the software that you're using that can speed up your job. So let's say the same person had 75 receipts. I'm going to throw in 2 points. So 1 point for every 50 receipts, or part of. And then down here under the premiums, you know what? I just give them one of everything, because again, they kind of want an in-house bookkeeper. If we take a look over here at the software included, I used QBO Essentials and I used HubDoc. And this person also wanted their personal income tax with a T2125 for those are in Canada. It's a sole prop. So that's basically what I quoted, which are my prices for there to put that in here. Now here's where the variance plus and minus box is, and I'll show you in a few moments how that actually has an impact. So if we pop over to the client sheet, you'll see here's the prices, $317.67, $580.17, and $973. Now somebody might say, wow, that kind of seems a little high, $317, and I would round up as well too, but somebody would say that sounds a little high for just reconciling a quarterly HST filing. Well, it is, and I'm doing this to show you how you can negotiate with the client for services. So I would tell them those prices, and then I would shut my mouth and I would actually let the client respond. If they don't respond immediately, I know they're probably thinking, wow, that's high. So I'm actually going to say something. Say, well, what do you think about that? You feel that's, if that's reasonable? And they'll probably answer and say, well, that's a little more than they were expecting. So I would say, okay, I priced you based on what you asked for. Let me show you how we can take advantage of, what the technology has to offer to lower that price for you. So if you want to use that smartphone that I see there in your hand to take a picture of your receipts and get them to me that way, not only can I bookkeep immediately instead of always, trying to catch up and working in the past, I can be working in the present. I can get those receipts basically, within 24 hours of you snapping a picture of them, I can be working on it. You can save some there. Now, I don't have to scan the receipts because they're going to use the HubDoc app, and I then would present to them about the bank feed. So that way, again, I can see, the information comes in and I can see what receipts they haven't submitted to me on a weekly basis versus, again, waiting a couple of months down the road by the time I have all the information to be able to say, hey, these receipts are missing because they might have been stuck in the glove compartment of their car in the middle of the hot summer on a thermal receipt, and now that thermal receipt may have faded. That's not going to do them any good. So when we sell it that way, we take out the points for that and pop back over, and that 518 just dropped down, that 3 and change just dropped down by $75 a month to $252. So again, I probably ran that down to just $250 a month for that one. This 518 just dropped down to $383. So again, I would put that at $385. So, and then this one is $777. I want people in the middle package because I want to be working with them, but these prices definitely sound a lot more reasonable, and I've been able to negotiate with services, and I've been able to determine what is more valuable to the client. Now, if that client said, oh no, I still want it the same way, I'll take those prices, it's worth it to me to pay more to have that done, have at her, go for it. But nobody is going to do that. I can tell you, I've had not one person say they would rather pay more. And when they see this, they say, you know what, sure, we're open to that. And once you get them working with it, they love it because it's so easy and simple for them just to snap a picture, and then when they get all of their information, when you're working in real-time data, it blows their minds. And that's how I've been able to grow my business, is with the referrals from that. I don't pay for advertising. I don't advertise, around in the areas. Since Leanne started, we've just kind of started she started to do the networking, but I've grown all on my own just basically by that. And my clients love the services that I offer and how this is so different, and that the information is so accessible that they talk about it and they refer people over. So that's how you would negotiate services. Now, let's kind of think out of the box here. Let's say, you've got somebody who says they've got 3 very specific ways that they can quote. So instead of turning around maybe and sending, these 3 prices out that way on the 17 hats, the options I might send out to them is, again, I might send out their lowest option, being based on the middle package with the other prices. So that might be including the pickup and drop off receipts, the scanning receipts, and the manual entry. So I might put that in as my lowest package and say, here's what you asked for. It's $580. Here's option 1. Option 2 will be this price here. So again, go back in, do some of these changes. Option 2 is going to be this. And then option 3, might be the all-in price, the $777 all-in, or that might be with, say, hey, let's throw in an AR package here. If they have, some cash flow issues and say, what, okay, sure, there are some issues, they find it difficult to chase people at times. I'm going to throw that, and I'm going to put in the cost of the monthly, the invoice Sherpa. And we take a look back here. And there's these. So sometimes when I'm quoting somebody, I might be in and out of this sheet. But again, you want to be able to be customized. And again, if there's something unconventional, think 1 hour per point. And you'll be able to quote anybody that way. So, yeah, so that's basically it in a nutshell. Now, the Excel template that I demonstrated here today is available for purchase along with other time-saving templates at a limited time pricing. As a special price, it's available for $99.99 Canadian, and that price includes a single template installation with a lifetime license. And for $199.99, you can purchase a template as well as an individual session with me on how to price your clients. I am working on an online app that I'm really hoping will be ready for launch by the fall. I know I was hoping to have it ready for launch in the spring. Unfortunately, there were issues with the software developers, and we had to scrap that and start completely from scratch with somebody new. So unfortunately, we're starting all over again. And that is, I just simply I got taken. I got taken point blank. It was not at all what I got passed from person to person to person. It was not at all what I wanted, what I had articulated. So I just took it because I had thought that I was dealing with somebody in North America. It turned out that they subbed me to somebody who subbed me to somebody who subbed me, and I was dealing with somebody on the other side of the world who just, English was not their first language, and there were some huge language barriers. So we're starting from scratch anyway. So let's see here. And all of those who purchase a template are actually helping to fund the cost of the app. So you will receive a free lifetime subscription. And what this is going to be is it's going to be the same type of setup, but you can log on to a website from anywhere where there's internet, and you can get your price from there. And do you want more? Check out my Bookkeepers Corner page on my website to subscribe to my blog and find future webinars and information on my newly launched Tanya's Bookkeepers Bootcamp program. And of course, if you go to cloudbookkeepingservices.ca/survey, there's I do believe it's only 4 or 5 quick questions that you can answer to enter a draw for a Tim Hortons gift certificate. So this is normally where there's questions, but unfortunately, I don't have anybody here because this is to replace a recording for one that I did earlier today that the recording did not work out. So we'll just bypass the questions. And here's my information. So again, my blog, my Facebook pages, my Twitter, LinkedIn, Instagram, YouTube, Google+, and of course, thank you for attending. And if you haven't attended in a while or have previously attended, of course, you'll know that there's more information that I have put out here, and I try to keep giving different examples and different information for each one that I do, because I want you to see value in continuing to come back to, watch more of these webinars to be able to, fine tune your value pricing, because it truly is the way of the future. It'll enrich your business, enrich your life so much, and enable you to then turn your business into what it is that you want to do. So I've been able to take that to extra time and turn that into advisory services for my clients. So they're again gaining extra value because of that. Okay, so again, thank you very much for attending. Take care. Have a great night.